We're live. We're live. Good morning. Good morning from Los Angeles. Welcome to Trading with Sergio, Thursday edition. Welcome to Trading with Sergio Drawdown edition. Drawdowns are normal as long as they're kept under control. We had some absolutely ridiculous earnings, and the results speak for themselves on Meta, on Microsoft. Apple is today. Every company is just hitting it out of the park from the numbers anyway, and the reaction is swift. Carvana, AppLovin, Hood, incredible. I mean, the fact that Microsoft and Meta alone added 400 billion so far, probably more now, to market cap in a single overnight session or during the now day, incredible. And whoever has been in Mag 7 proves the point, right? Price doesn't lie. It's your scoreboard. And in the meantime, instead of taking advantage of that stuff, I'm dealing with some trash stocks at the moment. Well, they're turning into trash, but I can tell I am cold at the moment. So I told my members group, I go, don't touch it. Don't do what I do. I say that anyway. It's risky. I can manage it. But as traders, I have at least, and I've seen it with traders for 30 years, we go into cold periods and hot periods. And I've caught a cold maybe a week ago, but then I'm reducing positions but you got to keep plugging along, or you're going to go completely flat, reassess, come back. That may happen after what happens tomorrow with me, working on about a 6-7% drawdown while the market's making all-time high. That's not a good thing. In fact, a couple of days ago, I said your account must be making all-time highs when the market's making all-time highs. So you got to be realistic with yourself. You got to be real with yourself. You got to have a conversation with yourself and say, okay, this will pass, but do we push? Do we press when we're cold, or do we just pull back and reassess and come back? I think the other one is the proper one. Coincidentally, I have a session with my trading coach of 30 years, 28 years actually, tomorrow, and I'm pretty sure I know what he's going to say. In fact, during the members live, I had a come to Jesus moment by myself yesterday, and I know what to do. It's just a matter of doing it as opposed to being stubborn about it, because market does not give a shit who you are, what you know, how much money you have. You got to keep the drawdowns to a minimum. I gave the math on this already. If you go down 7-8%, it's very easy to recoup that and go up and make new all-time highs in account equity. That's why I keep saying, I've been saying for a year, I trade account equity. I can't pay attention to anything else. Stocks are going to do what they're going to do. And so if you have a 25% drawdown, now you need 38% upside to equal your all-time high, equity all-time high. If you have a 50% drawdown, you need 100%. So roller coastering is not my thing. And you can also tell when you're cold or hot. When every time you buy a stock, it immediately goes down on you. Well, that's another, many signals that traders receive. Some ignore, some don't. I'm not the ignoring type, so we'll see. We'll see how much exposure I reduce, and I'll go through the positions in a minute. They're not positions that are going to blow me away, but then, every day you have a couple $3,000 drawdown. That adds up, just like it adds up on the upside when you're warm. And when I was hot, about a couple of months, all the way down to maybe a week to 10 days ago, I pressed. That's when the account was making all-time highs while the market was not making all-time highs. So, you just got to manage. That's one of the toughest thing a trader has to do. Be honest with themselves. I swing trade. I don't day trade. Sometimes I wonder, should I dabble into it? But no, it works for me. And whatever works. If it ain't broke, don't fix it. Just adjust it and amend it. So welcome to Trading with Sergio. What do we have? We had the Fed decision. Obviously, they didn't cut the rates. Trump, I'm sure, is going crazy. The Gold market had a sell-off. I'm in gold. So, all these things that I'm doing are just going against what I'm expecting to happen, and that's the reason I'm cold. Important, very important thing is today, there was a lot of macroeconomic indicators that came out. Tomorrow's unemployment, but today consumer spending came out pretty strong. I don't know where people are finding the money, but they're finding it and spending it. And GDP was pretty strong, 3% versus 2.4 expected. Fed is saying, well, everything is fine. We don't need to cut rates. And I kind of agree with the Fed actually on this one, just for the fact that the macro picture is very strong. And you can tell by all these Mag 7 stocks doing what they're doing. And we'll see what Apple does. I mean, out of the Mag 7, everyone hit it out of the park. The only one that went down was Netflix. And Tesla is underperforming for sure. But Meta and Microsoft and Amazon and Google, they all did very well. So today's Apple's literally unchanged to the penny on a $208 stock. I'm sure the implied volatilities are super high, but then, a lot of people play the lottos on earnings. I try not to trade around earnings because I don't want to get hit with something and get my face ripped off. But then a lot of people do. A lot of people buy these weekly options, or daily options, whatever they are. And they're reaping the rewards. I mean, if you bought, Meta options is 60 points out of the money, you probably paid a dime for it, and they're into the tens of dollars now. So, that's what option trading is for: limited risk, unlimited upside. It's a good thing, right? People do it, and my hat's off to them. So let's see who's here. Luis, good morning. Luis, one of my members, he has the hot hand at the moment. Keep it up, buddy. Meta, Mr. Bond, and Traveler is here with his eyeballs as usual. What happened? Did I freeze? I think I froze. Okay. Did we just get cut off? Okay, I'm back. Yeah, I have internet issues, I guess. Macro, good morning from San Diego. And if you guys want to come up, I'll post a link up. Yeah, StreamYard is having issues as usual. My internet is having usual issues. Yep, I can tell. Let's see where we are. Here's the link. If you guys want to come up, take a risk and come up. I don't know if we can keep you on with this internet situation, but I'll be on probably for 45 minutes or so today. Tomorrow, I'm going to do a power hour, 10 a.m. Pacific, 1 p.m. Eastern for about an hour. Yeah, that's where we are. And let's go through the positions. Let's see my drawdown city. You guys can see this, I'm sure, or I hope. Yes. Okay, here's my drawdown city. Positions. What do we have? We have AIVA Technologies. I'm on a synthetic, long synthetic. Short September 20 puts, long September 20 calls. Not 1-for-1. I added 5 more options, so I'm short 20. September 20 puts. Stock is 19. And, it's not away from me, but that's one position that I may close because it's not equity efficient. The reason for that is they're charging me. If you guys don't know about margin and things, I'm not on margin, paying interest or this or that. But the key for you guys to understand is there's something called ETR, expected trading range, and there's something PNR, point of no return, when they figure out margins, and they're basically charging me what I would buy for the stock cash for the naked puts. So, well, what's the point of that, right? Might as well buy the stock as opposed to doing anything like that. So I may do something like that. So synthetic long on that. I expect a bounce. We'll go through the charts in a minute. I'm short 2,000 shares of Joby Aviation. Basically break even, but I have sold puts against all the positions, 17, 16 and a half, 16s, and 15 and a half expiring tomorrow. So that's going to be increasing my cost basis. I'm long 8,000 shares of Lithium America. I have a covered strangle on it. I don't mind buying a couple thousand more shares. That'll be the limit, 10,000 shares. I'm short August 15th expiration, 2.5 puts, and I'm short 3 calls. So if I get called away, great. If I get put, fine. I'll lower my cost basis. So today I started tiptoeing into Lululemon. I mean, what a disaster of a stock, right? Or a chart. Stock is testing 200. 200 is key point. If they take that out, I'm pretty sure it'll have a whoosh down to 185, 190 range. On this one, I'm just strictly buying October 250 calls. I think they're reasonably inexpensive. I bought 15 of them so far with an average cost of 530. They're about 530. So I am I'm short a put credit spread on NUGT, which is the 2x ETF of the daily gold miners. Goes with gold, obviously. No need to mention that. I am short the 75 puts for September. I'm long the 70 puts, so that's called a put credit spread. I was long a call debit spread with the 85s and 100s. I covered the short side of the call debit spread yesterday with 50% gain. So, but of course, the long side of the call debit spread is eating it. The put credit spread is about even. So, underwater position, no question. I have a synthetic on, flat synthetic. I'm short 12. Soundhound earnings are coming out on that. We'll see if I hold it through that. Short 12. Soundhound 13 puts and long 12. Soundhound 15 calls. And I started buying September SPY 620 puts. I had August 15th 630 puts. I sold them. Actually, either broke even, made a little bit, or lost a little, not sure, but the time's getting closer. So I rolled them to September. I will buy some more. I bought 15 so far. That's a hedge, or, there are reasons for me doing it. So, I'll get into it when I look at the charts. So, yeah, those are the positions. Drawdown, where's the drawdown coming from? Let's see. Well, LAC, right? I'm long 8,000 shares at 313. Stock is 255. So, but I had sold calls last month. My true cost is 3. Well, that's 45 cents. 8,000 shares, that's $3,000 drawdown. Lululemon, I just stepped up today, so not much there. NUGT, that's a couple $1,000 drawdown. So that's how you add up to 5, 6%, 7% drawdown. Same thing with Soundhound, going down a couple $1,000. So that's it. That's what we have to watch. I mean, we can't just put our in the sand and hope for the best. Trading is a game of knowledge, obviously, a little bit of luck involved, but most importantly is risk management. You got to manage risk. You got to know what your risk is, and you keep your drawdowns 5, 6%, so you can make all-time highs when you turn warm again or hot and press, like I did a month ago. I had 13 to 15 positions on, and I was pressing because I knew I was hot. Well, now I'm not. Well, I still have, let's see, 1, 2, 3, 4, 5, 6, 7 positions. So cut them in half. I may just liquidate all the long side and leave the put side alone. I'm going to just take everything off, be completely flat, completely cash. I'm still 50% cash. I have a lot of bullets to shoot, but then what's the point of dollar cost averaging on a losing position, right? It doesn't make any sense whatsoever. In trading, maybe if in investing, you buy a stock, it goes 5% lower, you buy some more, but at some point the madness has to end. For example, Lululemon. You could have bought Lululemon since 400, and you would be, it's cut in half already. So to me, stocks are to be bought and sold, and no need to press when you buy something and then it goes literally within minutes, you're down on it. You're not cold. I mean, you're cold. You're not warm. So let's go to the front real quick. Let's see if I have any questions. Okay, Manny P, good morning. Macro, good morning. Yeah, we'll see. Apple is great, but I prefer oranges. That's funny. Vic, what's up? Mr. Steady. That's what we call him. Mojo. What's your nickname, Mojo? Did you pick a nickname yet? No? So we're picking nicknames for all our members, and there are some good ones in there. And but you need to be a member to be able to get a nickname. I don't pick it for them. They do. and it's pretty appropriate for most of them anyway. So let's look at some charts. Let's do that. Let's look at the big charts. Okay. So we did today bounce. The high today is matching the breakdown trend line. Usually we do bounce today and roll over. There's a bearish MACD divergence developing here, but we'll have to wait and see. That's SPY. Triple Q, not so much, because he has the MAC 7 in there. Although it almost is turning red now, and that also has a bearish divergence. So we got to be careful here. I don't want to step on poop. Right? Okay. So let's take a look at some charts. First of all, let's take a look at what I'm in or what I'm nibbling on or buying. Let's start with AEVA. The stock was almost $40. You know, I'm buying the 20, selling the 20 puts, buying the 20 calls. A steady, really downtrend. It's into support. That's the only reason I'm buying right about here, about 18.5, 19 range, and hoping for a hold and a bounce to the 50 EMA or 20 EMA. That would make me a ton of money, but then MACD is ugly. I mean, stock has been down 8 out of the last 9 days, so you expect a bounce. It's still in an uptrend long term, but short term definitely downtrend. So when I do these and then they go immediately against me, I know I'm cold. And usually I'm pretty good taking the bounces. And this one is kind of struggling. You know, I mean, we're not down on the trade, but, you know, I don't want to wake up with some nastiness. I'm short a couple thousand shares of Pony. Not Pony, Joby. What am I saying? Pony is another stock. Joby, let me get rid of those labels. I'm short a couple thousand shares, but I've been selling puts for the last 2 weeks, so my cost basis is really probably at an all-time high. But the fact that after doing this kind of parabolic move, the fact that it's not going down and building this continuation pattern, bullish pattern, I will cover that short. My puts are expiring tomorrow. If they do expire worthless, no need to mess around. I will retry again if they make a higher high. No need to press. And this looks like it doesn't want to come down yet. But when it does come down, it's going to have one of these things. So that's that. Gold dollar index has been rallying. That's why gold is coming down. Last 2-3 days, yeah, it's up again today. This is a big move up on the dollar. When the dollar goes up, gold does not like that. Most asset classes don't like that. So this is gold. Gold is up a little bit today, but it's into big time support. And if we do roll over here, we could have a nasty sell-off in gold. So, and UGT goes with gold. So still in kind of a trading range between 70 and 80, but I'll draw the line at 70 if we do take that out and take my loss and move on. So everything is up in the air. Really, price takes precedence, and that's what I'm going to do. Watch price, and whatever it tells me, that's what I'm have to do. This is Lithium America. I mean, I got it. I bought it. I saw cover calls, didn't get called away at $3 and change. It looked like it's about to go, and look at the way. Look at that, 5-6 days, nasty down days in a row, every single day. And so when you do these things, you know, now it's into support though, right? So right about here, about 2.5 range. Okay. I mean, the only reason I'm holding this really is just their balance sheet is so clean. They have literally $2.25 in net cash, and you know, you're buying the stock for net cash plus, but then they burn cash. Obviously, they're a lithium miner, but you know, it's going with Albemarle, which is this puppy. And that one, this moved, that moved, the smaller version moved, and then last, I mean, 1, 2, 3, 5 days, look at that, right? From 85 down to 63 low today. These things are moving, man, okay? And next one, we looked at NUGT. What else? We got, just started buying some October 250 calls. You know, you're going to say, why are you buying those? I'm just buying straight calls. I'm not selling puts or anything. It's just a horrendous downtrend. This is Lululemon. Look at that thing. I mean, come on now, right? How ugly is that? The only reason I'm step toeing here and gingerly and going to October is give it some time. There's earnings coming out, I think September 6th. So not yet. There should be an oversold bounce here, potential bullish divergence developing, but that's expectation. This is why I'm stepping up. Okay, this is the 200 EMA going back literally forever on the stock from the start, basically. So stock right now is selling at the same price as it was selling in 2019, middle of 2019, $200 right there. So it's been dead money. It's been a trading stock, beautiful trading stock, right? It goes from 250 to 500, down to 225, up to 420. When it moves, this thing moves. And that's why I bought the Octobers, and I'm buying them. And I have a count to down to here, about 130 on this, but then I'll be long gone before that, obviously. And just looking for a bounce to about 230 to 235, 225 to 235. At that point, those Octobers should double. That's all I'm doing, straight calls. Soundhound, synthetic, long synthetic. Let's look at the daily on this, to the monthly. That's into support about 200 EMA. That's the only reason I'm holding on to it. Everything else pretty much is into support. Another way I know if I'm hot or cold, yesterday I looked at applied digital, and look what happens today, right? I didn't do it. It had pulled back to 50 EMA. Perfect buying point. Nope. And sure enough, right, up 30%. So when you look at things and you don't do it, they go up. When you do it, you go down, you're cold. And SPY puts are self-explanatory. I showed that already. So those are the positions. And but let's go through some Mag 7, Apple, just literally up like pennies. So it's been going sideways. There is a little bit of a downtrend coming about at 223. Either this is going to also gap up and conclude the earnings season for the Mag 7, or gap down, one or the other. It's just been going sideways. It's a neutral pattern, really. But I'm not going to trade it. Some of my members are trading AAPU, which is the 2x ETF of Apple, Meta. What can you say? I mean, look at that. What is there to say? Just stock is up 7x since it hit 100 a couple of years ago. You guys remember when it was 100? Yeah, incredible. Microsoft, same thing, new high. Although they're all on their lows, they're being sold actually. So we'll see. We'll see how this is going to all work out. SPY 636 now. Well, good thing we bought those puts. Yeah, we get rolled over finally. Yeah, but everything I'm long is going to die. So doesn't, it's just a hedge, really. Let's see if Joby is going down. Yeah, it's going down pennies. But Netflix was the only one that did not like the earnings. So let's go to the daily charts. It's been going down about $170, but it's a $1,300 number. Google earnings were good. A little bit of a correction today. Amazon were good. Still up for the day, walking towards all-time highs. NVIDIA, new all-time high today. Absolutely amazing. $4.5 trillion company now. Literally, actually, NVIDIA is larger than DAX, the German market, twice as large as the French market, and twice as large as the British market. Just a single company. I mean, think about it, folks. Yeah. What else? We're looking. Tesla's been selling off actually when the market would do. Yeah, it's down 8 now. I mean, I do the wedge that everybody's looking at. What good does it do? I don't know. It's as neutral as it can be now, one way or the other. We're going to get a break to the downside, to the upside, and that wedge should bring in some volatility, break of the wedge up or down. We'll see. We'll see what happens there. So, some of the nosebleeds I go through, Hood earnings were amazing, but stock had gone up so much that, it's down today. Palantir, stock at a new high or almost at a new high. What else? Nosebleed stocks. Oh, Oklo, I think it's making a new all-time high. Yep, it's making it. It's $80 it hit today. Amazing. HIMS new 52-week high or all-time high, or they are equaling it just about. After that gap down here, I don't know how people trade this up or down. I mean, look, there are groupies. I have a good video coming out about stock groupies. I just, after a gap down like this, if I was in it, I'd be just, okay, that's it, take my loss. And sure enough, I'd be wrong. I mean, I don't trade the stock, but a lot of people do. And, you know, a lot of them are groupies. They don't know anything about the company or earnings or this or that. They just think it's just going to keep going up because they're used to things. The Stonks only go up, right? And, you know, all power to them. They're the ones that are making the money. And I can't question that. And App 11 today, massive move. Actually breaking out, kind of read it. Good earnings, gap up. Carvana, absolutely amazing. What a round tripper, right? I mean, talk about a round tripper, folks. Look at this. Okay, this is a 10-year chart of Carvana. Carvana was 377 in July of 2021, came literally down to $3.55. And now we're back up to, we just made a high of 410 today. And at the moment, I mean, you know, it's not there, it's selling off a little bit. But think about that, folks. Think about that. And when it was 355, October of 2023. We're not talking decades. This is amazing, right? And all power to them, whoever bought it at 355 and still holding it. I doubt anybody did. I'm sure the insiders are super happy. What else are we looking at? TLT is the 20-plus year Treasury bond ETF. So if TLT is green, that means interest rates are going down. That's shaping up like rates are actually going a little bit lower without the Fed cutting it, because the bond market doesn't listen to the Fed. It really, honestly, they don't. So I think I'm going to buy some more puts on SPY. I think the green today closing red would be pretty negative, actually. Yeah, that's what's happening. Now we're taking out the low of the day. Let's go to the front. Yeah, everything I'm long is selling off, of course. Yeah, we need to cut the bleeding here. You know, 15 puts is not going to recover whatever you're losing on the long side. I'll keep the Lulus. I'll keep, I don't know what to keep, what not to keep. Yeah, you know, should have bought more puts. Should have, would have, could have. I'll buy some puts on the bounce. Yeah, Tiff, we closed red today. Watch out, folks. Seriously, I'm not kidding. And we're pretty close to being red today. Literally, we're like 0.1%. It's odd. It's ironic. Everybody in the boat, and then the rug pull comes. Yeah, there we go. Yeah, this is yesterday's low. I will buy some more puts on the bounce here. Yeah. Yeah, I think I bought the wrong shit at the wrong time. I mean, I'm short, but my short's not going down. My long is going down. That's the problem. Yeah, now you get down. Yeah, I don't like it. I certainly do not like it. Yeah, making 1,000, losing 3,000. Making 1,000 on the short side and losing 3,000 on the long side doesn't make sense. Yeah, we're really accelerating now. Well, almost red on SPY. Closing the gap. Will they bounce? Who knows? I don't know. Well, now we're red. Now we are red, folks. Massive green to red is not a good thing. I assure you guys. I can assure you. What to do? Close everything out. Wait one more day. It's a tough decision. It really is. It really is. Because, you know, my mentors used to say, it's never too late to sell. Never too late to sell. Yeah, give me a little bounce and then I'll buy more puts. Index puts. Okay, let's go to the front, answer some questions, and go have a cup of coffee. All righty. Okay, when I get hot, I'm going with Mojo Man. Okay, sounds good. Shadow Stand. No, I like Mojo Man. Mojo Man is better. XRP. Right here, one of my members is big time in XRP. I only DCA Bitcoin. I only buy Bitcoin. I may look at Ethereum now because that's getting kind of institutional ownership. I mean, everybody's an XRP, right? From Barstool, Presidente to everybody else. I don't know much about it, honestly. I look at the technicals, it looks good, right? But a lot of people, again, all I can tell you is don't be a groupie. Understand what you're buying, understand what your risks are, and hope and pray is not going to get you anywhere. Vic says, I bought METU 41.52 and sold Tuesday 42.35. Today 49. Well, how did you know? I mean, you don't know. Or it could have been 29. You just don't know, you know? I mean, you bought it for a reason. So you made, I guess, a little bit of money and got out. Yeah. I mean, who knew Meta, a company like Meta, a $2-3 trillion company can go up 10%. How? I mean, pork bellies trade like that. Meta doesn't trade like that, but that's where we are these days. You know, stocks are going nuts. So let's take a look one more time. Yeah. Yeah, that's where we are. Selling off. Yeah, shorts are not going down. That's the fucking problem. I don't mind holding on to the longs, but shorts are not. You know, put credit spread is not going to hurt me. That's limited risk. The only major risk I have is this first one here, AEVA. It's acting bad. Little risk on SOUN, so I'm just trying to gauge where is my max risk. Yeah. Max risk is on the first one with the ETR and PNR. ETR and PNR, I explained that to you guys, right? EPR is expected price range, and PNR is point of no return. And yeah, they're charging me $40K for that, and that's too much. I might as well buy the stock. You know. Yep, we're just selling off some more. Well, we closed the gap. We're red, green to red already. Good thing I bought 15 puts. I should have bought. Well, I will have to buy more puts to balance it out or get out all the longs, one or the other. Yeah, that's what I have to do. Because you don't want to look 5% going to 7, 7 going to 10, 10 going to 12. If you're dealing with a six-figure account, it's really tough to come back from that because then you become gun shy anyway. So that's gold. It's NUGT 71.78. We're short 75 puts and long 70 puts. So at least it's a put credit spread, limited risk, limited downside. We know max loss on that. Yeah. Dollar index. Dollar keeps going higher. That's the market doesn't like dollar going higher. No market likes it, including the S&P. And that was a massive move, folks, in the dollar. It's been going down for 10 months, though. So, you know, we'll see. Yeah. Yeah. Okay. I'll answer some more questions and go have a cup of coffee and then make a decision. If we do get a rally, though, I will definitely buy more index puts. So we seem like a short-term bottom here. Once we bounce up a little bit, I'm definitely going to add to the puts. So the puts I'm buying index-wise is SPY, September, regular expiration September, 620 puts on SPY. You know, so what is VIX today? Is VIX up today? Probably is. Yeah, VIX is up big actually today. That's interesting. That's interesting. You know what happens when the VIX starts going up, right, guys? I mean, it's still coming off from its ass into 15 range. Yeah, if we VIX take out 19, I think we'll have problems, Houston, especially if we take out 22. As you know, VIX is an inverse indicator of the market. Okay, we're back to green. Yeah, let's see where those puts are. Puts. Yeah, what's my cost on those? 680, 720. Yeah. Okay, we'll manage it. You know how to manage. Keep the short, obviously. Can't do much about, well, I can, but, you know, I have short puts that are still massive, not massive, but for one day, they have a lot of extrinsic value. And if it drops, I get assigned and close that position. So that one I'm not going to be watching too close. Lulu, I'm going to hold up on October. So what can I get rid of to reduce exposure here? I can do Soundhound, which is into support. See, I'm trying to talk myself into these things, which is a bad habit. NUGT, limited risk. I mean, I'm getting the drawdown, but, you know, small drawdown, but it's still adding up. This is the only one that could kill me, actually, with the short puts. I can close the short puts. That's what I should do. I should close the short puts on pretty much everything. Take small losses. And buy more index puts. Now, if we do a rally back to the 20 EMA intraday, I will definitely add to those puts. Does not look right to me. Something doesn't feel right. Okay. So that's what I do. I talk to myself, and then I try to figure things out. Swung the swing trade. Yeah. Okay, for shits and giggles, I bought 2 shares of FIG. Did you really? Well, you're lucky you got 1 share. I didn't apply, but you apply for 2 because the way they do it is on Robinhood or other, because they're not the lead underwriter, so they don't get shares. As a gift or as a bonus, they give their clients shares. You know, you got 1 share. You're lucky you got 1 share. And I think another member got 1 share. Didn't that start trading yet? So you can flip it at the open and make your money. And unless they have restrictions, you need to pay attention to that. Because sometimes they don't like flippers. So read the small print on that. Yeah, that's what you got filled. A lot of people are going to get 1 share. It's like a gesture of appreciation for you being a client. That's what we used to do when we were the lead underwriter. We would give our best clients the most amount of shares on a hot IPO, which this happens to be a hot IPO. And probably Robinhood got maybe 50, 100,000 shares, and then they're going to give it to their best clients. If their best clients ask for 1,000 shares, they'll get 100 shares. If you ask 2, you got 1. Minimum obviously is 1. So that's the way that works. That's the way IPOs work. Did that open yet for trading? What is the symbol? FIG? FIG? I think it is, right? Let's take a look at that. Let's take a look. I think it's FIG. Now we're bouncing. I'm about to buy more puts. Figma Inc. Yeah, I guess it's FIG. Hasn't opened yet. Has it? Am I right about FIG? Because it says Figma. Maybe they haven't updated it yet. Yeah. Okay. Yeah, I'm going to definitely buy more of these puts for sure. SPY puts and balance and reassess by the end of today and see how things are at. See what kind of drawdown we're getting. No need to keep bleeding. Okay. Bounce a little bit more. Let's buy some more puts for sure. Okay. All right, folks. Stay healthy. I'll be back tomorrow for Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Yeah. Okay. No, they're not raising the price to 95. Is it really gonna open at 95? Yeah, it was 40 times oversubscribed, so I'm not surprised, but you're gonna get it for 33. That's the price. So you're not gonna pay 95. So when it does open, read the small print. You can flip it at 95, sell your one share, and make yourself 62 bucks. That's how IPOs are supposed to work. But if you do flip it, make sure they don't hit you with anything, because sometimes there is restrictions on flipping, meaning buy it at the IPO price and flip it at the opening price. I don't think it'll open at 95. I think it'll probably open in the 45 to 55 range, because at 95, the valuation of the company is like $40 billion. I don't think it's worth it, but then who am I to know? Hey, what's up? Can I analyze UNH? All healthcare stocks are absolutely getting trashed. Lower lows. I mean, not much to say on UNH. Same thing. Same thing with Oscar Health. Same thing with CNC. Yeah, it's just horrific charts. Just horrible charts. I mean, look at Lulu. Look at Enphase. Look at these stocks. It's just been in a bear market of their own. Okay, UNH happens to be that as well. Down to 250. Okay, that's the intraday chart. So let's look at that. It looks like Lulu actually is making a lower low. So longer term, I mean, if you're an investor, $250 is still expensive. Let's see. Okay, well, now UNH is selling where it was selling literally October of 2019, somewhere in that range. We're about 250. So 6 years dead money. Okay, so if we go further, because I always look back if you're going to have some reference. Yeah, it's taken out the 200 EMA, which is not good. Next level of support is 200. It's a crapshoot. I mean, long term, these things turn out okay, but you're not going to pick the bottom. So depending on your strategy as well. If you're investing in it, dollar cost averaging is what I would recommend. Again, none of this is trading or financial advice, but I can show you guys so many stocks that are in their bear market, like Nike was in its own bear market. Here's Enphase. Look at that thing. 339 down to 32. What? I mean, how do you deal with that? You may have thought Enphase was cheap at 250, 200, 150. I call these situations, look at this thing, 1 year chart, right? I call them catching a falling knife. And what is the chances you're going to catch it by the handle? Very low. Very, very low. And same thing with Oscar Health, although there are a lot of groupies on Oscar Health, a lot of healthcare stocks are not doing well. I think it was CNC. Yeah, look at that. Look at that. I mean, that's a 1 year chart. All healthcare stocks are absolutely getting decimated. Look at that. It's down to, I mean, we know where it's zero, right? We can't go below zero. So, but if you look at every single healthcare stock, it's horrendous. Look at it. CNC was $100 number. Now we're at 25. You could have said it's cheap at 65, 55. Now we're at 25. So CNC basically, that's called Centene. It's one of the larger ones. Here's CNC. Look at that, right? How do you deal with that? Actually, CNC is into some support here, about 25. It's going back to, folks, this is 2015. This is 10 years ago's price. That's why I say, man, stocks are to be bought and sold. I'm telling you, very rare you're going to run into a Palantir or an NVIDIA that just keeps going and going and going. And that game will end as well. And when NVIDIA is like 120, people say, what is it, 120? It's on its way to 50, right? It will happen. Look, everybody has their season. And that's why I'm skeptical of all these moves like Meta and Microsoft and things like that. People are just throwing money into it. That's because we keep printing money, but all healthcare stocks are suspect at best. And I mean, Lululemon, there you go. Granted, not the same. Nike was like that. Look at Nike, okay? Nike got down to 55. I actually got lucky and bought some Nike in my investment account because one of my members said, well, it was into support. I looked at it. It was into support. Basically, I bought Nike at the same price as it was like in 2016, 9 years ago, at 55 range. Bounced. Lucky, just lucky, pure luck. But all these stocks got cut in half or more while the market was going up 80% in 3 years, right? Same thing happening now with UPS. Look at it. UPS is selling where UPS was selling literally in 2014. So you got to just take this with a grain of salt. And 230 to 85, is it cheap at 85? Who says? I don't know. There's a reason it's going down, right? And I'm not smart enough to catch a bottom on these things. So UNH looks like next stop 200. Or who knows, it's the bottom. But in general, healthcare stocks are not doing well. This administration is not good for healthcare stocks. And UNH has its own massive problems, fraud allegations, CEO getting shot, and all that stuff. So I personally wouldn't mess with it. But again, none of this is trading or financial advice. All right, can we buy some more puts? Let's see. Did we rally enough? Yeah, I mean, they're just death. All these stocks. We're bouncing into the EMA. Let's buy 5 more puts. Let's buy 5 more at 710. Bouncing to. I'll put it at. Let's see. Maybe $7. Yeah, let's put 5 at 7. More balance, folks. More balance. Okay, that order is in. Yep. Balance is key. You can't mess around with this shit. They'll rip your face off if you mess around with this stuff. So I will have to look and consider liquidating some of the longs, or at least covering some of the short put of the synthetic side, just limited risk to the downside. Yeah, that's what I'm going to do. Okay. Hope I answered your questions. If you have more questions. Okay, I did that. Okay. All right. So join me tomorrow, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. You have a great day. I'm going to try to do my best to assess the risk to the downside, and we'll see. Call trading goes good with the bad, and you get that on this channel. I think very few, if not any channels, are as transparent as I am. Losses, gains, got nothing to prove, nothing to hide. I'll just put it up. Again, what I do is not trading or financial advice. Don't do what I do. It's very risky. Do your own due diligence. Everybody's opinion is what it is. I'm looking at charts. So charts tell you what happened in the past. It does not tell you what's going to happen tomorrow. And if anyone says, oh, I know what's going to happen tomorrow, they're lying. Run the other direction. I don't know what's going to happen the next minute, let alone tomorrow. So, but, there's experience. There's all kinds of things in trading. And experience, I think, is the most important thing, to be honest with you, because you've seen the movie before multiple times, so you can just draw some conclusions. They may be right, they may be wrong, but you can definitely draw conclusions as opposed to be a groupie. Most groupies do get shot at the end, but last couple of years, HIMS goes down, gaps down 20 points. They go, oh, I love HIMS. I have calls. I'm going to hold on to the calls. I'm like, they just hit the wall. And then it comes back, and the market proves them right. So I'm not here to question it, but you got to assess risk. And to me, keep the drawdowns short, assess, come back. You don't need to trade every day. So with that said, much love. Stay healthy. I'll see you guys tomorrow at Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Last but not least, if you do choose to become a member, click join, send me an email, Sergio@sergioavedian.com. I will send you the Telegram chat group link where we do once weekly live streams. It's more one-on-one. And the other thing is you get my trades live when I'm cold. Don't do what I do at all. On the Telegram chat group, I post them, and then I post my little Robinhood account who's getting killed at the moment, which is getting killed, and my actual major trading account positions every day. I post it, and the trades live. So you may see it as an advantage. I don't know. When I'm cold, it's not. When I'm hot, definitely is. So, all right. See you guys tomorrow.